Hi. So in this video, we're going to talk about the union budget and some of the key terms associated with what the government comes out and announces. A budget hota kya hai? What is the budget? The government will give you a report card of all its sources of incomes and the avenues where it is going to spend that money, right? What is the expenditure the government is going to do? So it is natural that we would want to understand what are these sources or avenues of income for the government or receipts for the government, and where is it that the government really goes about spending this money, right? So let's dive right into it. For any government, you would basically find that they would have some receipts, which is all the inflows that the government is going to get, and they would have expenditures, which is all the outflows that the government is going to do. If a government would have expenditure that is greater than its receipts, in that case, the government is said to be running what is called as a deficit. This term is commonly known as fiscal deficit. हमने ये term सुना होगा. The government would come and announce that fiscal deficit. Usually they announce it as a percentage of the GDP. So what is the fiscal deficit as a percentage of GDP? In simple terms, what the government is saying is that they are getting receipts of, let's say, 100, but they are ending up spending something like 110, right? We know that if you're receiving 100 and you're going to spend 110, you will need to borrow this remaining differential that is there. This deficit has to be done, addressed through borrowings that are going to come in, correct? Now let's focus on the receipts first. Where is it that the government gets its inflows from? ये inflows कहाँ से आ रहे हैं, right? So when you look at the receipts can be broken down into two components. You could have revenue receipts, or you could have what is called as capital receipts. What do you mean by them? Revenue receipts are receipts which are like income for the government. It's a recurring income that is going to happen. So typically the revenue receipts further get broken down into two components. You will have taxes revenues and you will have non-tax revenues, right? Within the tax revenues, you will again have sort of components that are there. So we have all heard about within the taxation revenue, you'll have direct taxes and you'll have indirect taxes. Now what are direct taxes and indirect taxes? Direct taxes, very simply put, are taxes that we directly pay to the government. In other words, these are taxes on income. So your income tax and your corporate tax would basically be components of direct taxes. There are some other avenues as well within this, but that's broadly the major components are income and corporate tax. Indirect taxes, as the name suggests, are taxes that we are not directly paying to the government. We are paying these indirectly. So we pay it to an intermediary who then deposits it to the government. So you could loosely put it as a transaction tax. So when you, let's say, when you buy any product and you pay taxes on that, you pay a GST on that, that's an indirect tax. You've paid money to somebody else who's then going to deposit it on your behalf, right? You could pay excise duty in certain cases. So these are your indirect taxes. Now in India, basically, if you break down taxes into numbers and let's say you get 100 rupees of taxes, approximately 50 rupees out of that is direct taxes and 50% is indirect taxes. Out of the 50 of direct taxes, roughly 25 and 25 come from income and corporate tax. So approximately, half and half is income and corporate tax. These are very loose approximations that I'm telling you based on broad, assuming the taxation number to be 100. ठीक है, तो ये हो गया tax revenue. What is non-tax revenue? Non-tax revenue is all, examples of non-tax revenue would be dividends that the government would get. For example, you have all these PSU entities that would give dividends to the government. That's non-tax revenue for you. RBI giving dividends to the government would be non-tax revenue for you. Right, so that's your revenue receipts that are coming from for the government. These are called revenue receipts because these are going to come again and again. These are recurring in nature. Every year you're going to get these coming out, right? Capital receipts, on the other hand, are sort of, one example of capital receipts would be disinvestments, right? What are disinvestments? When the government sells a stake in one of these companies, let's say the government does the IPO of LIC, for example, that would be a disinvestment. This disinvestment would basically go about as a capital receipt for the government. If the government is able to recover any loans on its accounts, then those are also capital receipts. There's one more element in capital receipts. We'll come to that as we go along. But broadly, these are where the government gets its inflows from, right? Taxes, both direct and indirect, non-tax, which is dividends from PSU entities, and disinvestment, which is selling stake in PSU entities. So that's basically going to be your broad components of inflows for the government. अब expenditure कहाँ हो रहा है? Where are the expenditure avenues that are there? Just like your receipts, expenditure can also be broken down into two components, revenue and capital. What are revenue and capital expenditures? Let's focus first on capital expenditure. Capital expenditure is anything that adds an asset for the government or reduces a liability for the government. So think of it as capex. If the government spends money on infrastructure, if the government builds a bridge, if the government sort of invests in a company, puts money in a company, does infrastructure spending, all of that is capital expenditure. Everything else that does not add an asset or reduce a liability for the government would be revenue expenditure. So this would include practically everything else that is there. You would have subsidies here, you would have interest paid by the government that would come here, you would have salaries paid that would come here. All your expenditure that gets done through various departments and ministries, all of that comes under revenue expenditure, barring the part which goes through that adds an asset for the government, right? So bulk of the expenditure for Government of India would be your revenue expenditure, right? We've already said that if your expenditure is going to be greater than your receipts, then that's going to create a deficit for you, right? Now remember, this deficit has to be funded through borrowings. You cannot endlessly have a higher expenditure than your receipts. You can do it for a few years, but then at some point of time you have to return the money that you've taken from people as borrowings, right? Otherwise people will stop giving you that money. So the idea of the government when they are spending more today is that they should be spending more in avenues that tomorrow increase their revenue sources, right? ऐसा spending करे जिससे कि कल tax revenue बढ़ जाए, या there is some other avenue of revenue that kinds of build up. Business becomes easy in the country because of that spending. General consumption kind of grows because of that spending. So that's the idea of the government spending. How should the government be channelizing its spending, correct? So that's the data. Let's look at some numbers. Now these numbers are pertaining to FY22 budget estimates. Now we'll have the new one coming in, but what were these numbers last year, right? On the left side in the first column you see the numbers in INR lakh crore, rupees lakh crore or rupees trillion, right? And then we have converted them into US dollar billion by using a conversion rate of 75 to a dollar, right? So let's take a look at this. The top part of this is all the receipts, right? So you'll see the tax revenue net to the center. Now what does net to center mean? Typically when you go back to the slide and you look at the total tax revenue collection or budgeted estimates of the Government of India, approximate tax revenue collection that the Government of India was planning was about 23 to 24 lakh crore, approximately, somewhere in that range, in that vicinity, right? Nearly a third of this, 1/3 of this is given to states. The remaining part is left with the government, which is about 15.5 lakh crore. That's what you see here. Non-tax revenue, remember, dividends, that's here, right? So that's about 2.5 lakh crore. You add these two together, that's about 18 lakh crore. These are your revenue receipts, A plus B, right? Then you have some recovery of loans, let's call that C, and you have other receipts. These are disinvestment receipts, LIC, IPO, etc. that were planned. So that's 1.8 lakh crore. You add A, B, C and D, and that's basically all your receipts that the government is getting, right? There's a number called borrowings as well, but we'll come to that in a minute. So if you add this up, this will be about 18, this will be about 2, so you're looking at about 20 trillion rupees of inflows. Right? Now what is the expenditure? If you look at the expenditure, capital expenditure is about 5.5 lakh crore rupees, sorry, and revenue expenditure is about 29.3. Budget estimates, these are estimates, of course, the actual numbers will come now, so we'll know what these are, right? If you add these two, you're looking at approximately 35 lakh crore that's going to come from there. The difference between 20 lakh crore and 35 lakh crore is your deficit, which is your fiscal deficit, 15 lakh crore, right? This is the same amount that you have to borrow as well. That's here. Only then will the equation match, right? You're earning 20 lakh crore, you are spending 35 lakh crore, so you have to borrow 15 lakh crore, right? On India's GDP, which you will note is $3 trillion approximately, or 220 trillion rupees, 220 lakh crore or 2.2 crore. On that, this number was budgeted to be 6.8% of our absolute nominal GDP, correct? That's where this number was coming from. So that's the construct of what the fiscal deficit is. If I summarize all of this, broadly, your receipts are revenue and capital. Remember, revenue receipts include tax revenue net to the center and any dividend income that the government is getting. That was budgeted to be about approximately 18 lakh crore. Capital receipts were supposed to be coming from disinvestment proceeds. So that was budgeted to be about 2 lakh crore. The current status is that the government is likely to get more tax revenues in this financial year, but they may miss the target on disinvestment. Having said that, they'll probably be ballpark this number added together. So added together, this is 20 trillion rupees that you get, right? On the expenditure side, you see revenue expenditure of about 29.5 lakh crore, capital expenditure of about 5.5 lakh crore. Add these together, that's about 35. The difference of these two, which is the fiscal deficit for Government of India, is going to be about 15 lakh crore or 15 trillion rupees, right? So that's the difference. We'll see what new numbers the government comes out with this in the new budget that comes up. But that's broadly how you would go about looking at the receipts and expenditure components of the Government of India. That's broadly it in this video. Thank you.